Into these FOMC minutes that came out just a few moments ago. A couple of headlines here that are getting my attention. I mean, one, just the fact that the Fed said that the patient approach will be appropriate for, quote, some time. Also, the fact that officials saw the inflation dip as likely, just holding true. I mean, what stood out to you in these headlines? Anything that maybe surprised you in terms of what the Fed was thinking that we didn't know before?
Right. So as a refresher, it was in the May 1st meeting where the Federal Reserve decided to keep rates steady at the current target range of 2.25 to 2.5%. In view was really inflation, whether or not the pretty low reading of core personal consumption expenditures of 1.6% was a temporary thing or a more permanent issue that actually might encourage the Fed to cut rates at some point in time. The minutes making it clear that a large number of the members of the FOMC actually saw it as a transitory issue. That is something that Chair Powell said in the conference that I was at on May 1st. It noted that a few participants, however, noted that inflation pressures could still build quickly, end quote. That basically reflects the thinking that actually the inflation issue could actually be off the table, and it could actually rise to a point where it actually incentivized the Fed to hike rates. So there's still some battling within the Fed about whether or not the next move might be a rate cut or a rate hike, despite the fact that markets are pricing in a pretty large shot of the Fed actually cutting rates by 2018. So it'll be interesting to see what types of developments we see headed into the June meeting. Again, middle of June would be the next FOMC meeting in terms of what the next move from the Fed might be.
Yeah, Brian, the last thing that you just said, just in terms of their thoughts on a future rate hike, the fact that that may not be off the table if in fact these inflationary signs are due to transitory factors. Is that why we're seeing the Dow maybe off just around 90 points today?
Yeah, well, I think, again, it's because the markets are basically very excited about the idea of a possible rate cut. President Trump, another person that's excited about the idea of a rate cut as well. But what we see from the Fed minutes is that there's still kind of no consensus about what the next move might be, which, if for nothing, signals that we're probably not any closer to a rate cut than we are to a rate hike. Another example is GDP growth, for example. We saw a pretty hot number come in for Q1, which might signal to the Fed that maybe to avoid overheating, it should raise rates. But again, I do want to caution that the minutes note that a number of members said that they had actually raised their projections for GDP growth. But keep in mind that was before the China tariffs were ratcheted up from 10% to 25%. So in the June meeting, where we will see another round of SEPs, again, economic projections, it'll be interesting to see if maybe they bring that back down, which again would add more noise to whether or not the next move would be a cut or a hike.
Yeah, that's very important to point out just the fact that their trade comments are now outdated, just given the developments that have gone on over the last week or two. All right, Brian Cheung, we'll check in with you in a little bit. Thanks so much.